Hey guys, it's AC. Welcome to my house. Today we're going to talk about why stocks are riskier than real estate. Now, if you have $100,000 to invest, which is a problem I wish everyone is always facing every single day, but imagine you inherited $100,000 or you got a huge bonus at work for some reason. You stocks IPO'd at your company you work for. Now you have $100,000. What are you going to do with it? Well, the riskiest thing I can think of would be you log on and you spend in 15 minutes picking one stock that you think is going to double in value or triple in value, right? And there's no advisement, there's no safety nets, no one's looking at your finances to see if this makes sense, but there's nothing stopping you from doing it either. You jump online and you spend $100,000 in 15 minutes, you have this stock and you hope it does well. Now, there is a risk with this stock that it goes down to zero, right? That company could be the next Enron or Lehman Brothers. It could go bankrupt. It could be faking their books. It could have a new competitor that comes along that takes all the market share, and that $100,000 investment could go down to zero. Well, alternatively, you could take that $100,000 and go buy one house. You could buy it in all cash, and it's not going to be done in 15 minutes. Probably the fastest you can buy this house is maybe 2 weeks. You could get it under contract maybe in 15 minutes. You wouldn't be able to own that property for 2 weeks. And that actually makes it less risky because a lot could happen in those 2 weeks. Maybe you decide, oh, I don't want to buy this property. So you at least have 2 weeks to think about it while the closing attorneys and real estate agents and everyone's trying to get the paperwork together, make sure it's clear title, that what they're selling you actually matches what's on the survey and all these other things that happen in a real estate transaction. So there's one safety net there. But also, when you buy a house, you typically have an advisor, which is a real estate agent. They're going to tell you this is a terrible decision, or they'll tell you this is a great decision, and maybe tell you some trends that's happening in the neighborhood. And these real estate agents aren't being paid by you. When you buy a house, they're being paid by the seller. So that's free advisement right there. Further, when you buy a house, it will never go down to zero. If you didn't use a real estate agent and you bought this house in 2 weeks with a closing attorney, making sure the title and everything is clear and clean, and you bought it, and the day you bought it, it burned down to the ground, you don't have $0. Because when you burn down a house, you still have the land underneath the home that has some value. Typically that land's about 20%. So you have $20,000 worth of land that you can go sell to another developer to build upon it. So with a $100,000 investment, your bottom value is probably going to be $20,000. Now there's ways to spread that risk around so it's not as risky in both stocks and real estate. In the stocks, that's buying multiple stocks. Really, the safest is to buy a mutual fund, which is thousands of stocks pooled together, and you're spreading your risk across a bunch of different companies. Real estate works the same way. You could spread that $100,000 across 4 properties. Put $25,000 or 25% down payment on 4 different homes. What's great about that is you're diversifying your real estate investment. You have an agent advising you on 4 different properties. You have a closing attorney reviewing it on 4 different times. You actually have to get a mortgage, so it takes 30 days for you to evaluate whether this is a good decision or not for you. And the mortgage company, who's going to be your partner on 75% of this, they're going to dig through all your finances to make sure that you can afford this, making sure your credit is good, making sure that your debt to income is of healthy levels before they approve giving you this money. And then once they give you money, it's a really low interest rate. Not only that, you can't buy a house with a mortgagee without getting an appraisal done, which means a neutral third party by law has to come out and give you the value of the property. With stocks, anyone can buy a property at any price at any time. But with real estate, using a mortgage, they have to appraise it to make sure that you're not making a mistake. Not only that, a mortgage company requires you to have insurance. You don't get stock insurance when you buy stock, but a home comes with home insurance by requirement of the mortgage company. So if that $100,000 investment does burn down to the ground, you actually have insurance that's going to build it back. And it might even build it back better. And you might even have more value because a fire happened. And that safety net is a saving grace in a lot of worst case scenarios on your investing path. And because you bought 4 properties, it also comes with 4 imaginary lottery tickets. Maybe one of these properties will double in value or triple in value. Just like if you bought 4 or 5 stocks or a mutual fund of stocks, one of those companies may go up in value while the other one implodes in value. Typically with 4 homes, one's not going to implode in value because you're not evaluating on having to resell this home one day. You're evaluating it on what does it rent for. A home that you bought for $100,000 that gets cut in half in value, all of a sudden becomes $50,000 in value. That doesn't mean the rent is cut in half. If you're renting it for $1,000 to begin with, all of a sudden it doesn't instantly become $500 rental. No, because you have a lease that has a 12-month lag. So even if with that 12-month lag, that housing market might crash and build back up, and then all of a sudden it's not effective. But during the housing crash, it actually creates more renters than there were before. So it stabilizes the rental values. That $1,000 rental probably stays a $1,000 rental. Maybe you don't increase it to $1,100 that year. At worst, you drop it to $950, maybe $900 if you're being nice. Even that $100 drop is probably still cash flowing you money and making it a profitable investment. So with all these different safety nets and the way to look at homes, I always consider real estate the safest way to invest, way more than investing in the stock market. You've got the advisors, you have insurance, you've got a neutral third-party appraiser confirming the value of all of these things, and you're not watching the daily fluctuations to determine what it's worth. You're looking at your fixed expenses, which are going to be your fixed mortgage rate and your property taxes, which adjust slightly every year, and your home insurance, which also adjusts slightly every year. Sometimes if you fix up your home, even your insurance will go down on monthly expenses for you, which makes you more money as a landlord. So there's all these different benefits to real estate investing to reduce your risk. That's why I encourage you to invest in real estate, and that stocks are not a one-size-fits-all solution, and a diversified portfolio is great for everyone. And I'm heavily invested in real estate because I believe in it, and it's worked well for me. And it doesn't mean I don't invest in stocks. I believe that real estate is the best investment, which is why I put most of my money in there. Sure, I invest in stocks as well. Just like if you invest in all stocks, I think that's a dumb move. You should also diversify and invest in real estate to get the most out of your money and to reduce risk. That's what this video is all about. How do we reduce risk? I think real estate is less risky for all the reasons I provided before. So if you like this video, please hit like and subscribe right now. I need all my subscribers to please leave a comment. Let me know what you think. I'm going to have more videos coming. If you want to buy the book, Over My Shoulder, House Fire, it's available for sale on Amazon. I go into all these reasons in my book. And you can also go to my website, thehouseofac.com, for more information about how to invest in real estate. Thanks guys for tuning in. I'll see you next time on The House of AC.